Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Brown. It is Wednesday, the 2nd of July, all day. As usual, myself and Mr. Brown will be jump-starting your trading day with a market review, a market preview, a bit of value, bit of swears. We'll see what happens. But before we crack on, let's get the legals out the way. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Mr. Ryan Paisley, or indeed Mr. Michael Brown.
Very good
Hello.
morning to you, Ryan. Good morning, everyone.
Good morning. You good?
Yes, I am. I'm just still marvelling at the fact that our esteemed Chancellor yesterday tried to pass a bill to cut welfare spending and has actually ended up increasing it somehow.
Well, this is it, right? You genuinely couldn't make it up anymore.
No, I've honestly got no idea how they managed to fuck it up that badly, to excuse my language. But there we are. Sort of sums them up at this moment in time, doesn't it?
Exactly that. Uh, what's been occurring apart from that?
Indeed, yeah. Let's crack on
Because otherwise, we're going to go down a very ranty rabbit hole.
Well, I'm going to have a rant again in a while, but
Go on.
I'll save that to the end to do a
Good.
little cliffhanger there. In terms of markets yesterday, obviously the month of July and the second half of the year getting underway, and equities starting the month in relatively soft fashion. Actually, the S&P ending the day about 0.2% lower. The tech sector leading the downside, with the Nasdaq down by about 1% on the day. Of course, that comes after President Trump and Elon Musk appear to have resumed or entered round two of their long-running feud. For those unaware, yesterday Trump saying that various other government grants that Musk is getting should be looked at, particularly around things like SpaceX. And Trump was also talking about whether or not they should investigate. They should investigate whether or not Elon Musk should be deported. So clearly, not exactly the best of friends between those two.
He also did say, why would anyone buy an electric vehicle? They explode.
It was like he did,
But
didn't he?
yeah,
So
but
has he got a
like
bomb sat on the White House
but
lawn? Is that what he's saying?
genuinely a week ago, he was sitting in a car, or 2 weeks ago, he was sat in a Tesla with Elon Musk saying this is the best car ever. I can't keep up.
No, nor can I. Nor can I. Anyway, in terms of markets elsewhere, Treasury's selling off a little bit across the curve, although really just moving back into the ranges that we've seen for quite some time now, with the 10-year yield rising by 3 basis points on the day, back up to 4.25%. In the FX space, it was a pretty choppy day, some initial dollar weakness pairing as trade went on, but we did see gold rally about 1%, reclaiming both $3,300 an ounce, and also rising north of the 50-day moving average as well. In terms of catalysts, I'll start with trade. Obviously, we are now just 1 week away from that tariff pause expiration deadline, whatever you want to call it. President Trump asked on Air Force One yesterday whether he's going to extend that. He said, and I quote, "I'm not thinking about it." I mean, we all know what's going to happen here, to be completely honest with you. He may not be thinking about it now, but I think he probably will be thinking about an extension in relatively short order.
He definitely is thinking about it now. He's just talking bollocks.
Yeah, that's another way to put it, and very eloquently phrased as always, Ryan.
Thank you.
Trump was also speaking about Japan. He said that he doubts there will be a deal with Japan and that their tariff could be 30% or 35% or whatever we set, and we'll send them a very nice letter, probably 1 page, maybe a page and a half, telling them what they're going to pay. Complete and utter nonsense, to be honest with you. Again, we all know that there's likely to be some sort of deal or some sort of punt there, so we can very much ignore what Trump is saying on that one. We had further reporting on trade yesterday, both of these centering around the EU. The FT reporting on a potential US-EU trade deal, that the first phase of such a deal would probably be very much akin to the deal that the US and the UK have struck, where certain tariffs remain in place while talks continue. Apparently certain EU ambassadors want that deal to include reductions in the 10% baseline tariff. Good luck with that, as the kids would say these days. The EU, again, also looking for reductions on some sectoral levies, particularly around automobiles, which is very much in line with recent reporting. And just sticking with the US-EU deal, we heard from Steve Moran yesterday, who is one of the economic advisors to President Trump. He was saying that they are in crunch time on talks with the EU, but that he is optimistic a deal can be reached. Again, very much in line with what we've been hearing recently. As for other catalysts from yesterday, just sticking in Washington, D.C. momentarily, the Senate, they have passed that one big, beautiful bill that has now been moved to the House. I would say it's not exactly resounding support that bill has received in the Senate. It was actually a 50-50 tie, which required Vice President J.D. Vance's tie-breaking vote in order for that to move to its final stages in the House of Representatives. It has gone a little bit under the radar, but reporting out of DC from a number of the more vocal GOP representatives in the House seems to indicate that they actually now think the bill is worse now that it's come back from the Senate. So although they are teeing up a vote on that today, it's far from guaranteed that it will pass. Nevertheless, it does seem to be making some degree of progress. Away from all of the political nonsense, the main event yesterday was a panel discussion at the ECB's annual shindig in Sintra. This panel featuring ECB President Lagarde, Fed Chair Powell, BOE Governor Bailey and BOJ Governor Ueda very much saw all four of them stick to their familiar scripts and their familiar rhetoric. Not really any sort of policy pivot from any of them. Now, I do just want to clarify that there have been a lot of reports around, and I'm going to slag off Bloomberg here because it's basically their fault, which I do very rarely. Bloomberg wrote up a headline yesterday which said along the lines of Powell refuses to rule out a July rate cut, which is strictly true. He did say that all of the four meetings that they have remaining this year are open, and that if things evolve in line with expectations, if inflation begins to move lower, the committee are likely to deliver rate cuts at one or more of those meetings, which is in line with the dot plot. This is where, though, you need to go beyond what the headline says and actually watch these events, as boring as they may be. Because the way Powell answered the question was a case of, I'm going to tell you we could move in July, but the message here is we are not going to. It was a very reluctant boilerplate answer of, I'm just keeping my options open as much as I possibly can.
Yeah, exactly that.
It wasn't Jay Powell sitting there going, we're going to cut in July and I'm giving you 4 weeks notice, which is how the headlines kind of framed it. So a little bit of caution required on that one. Of course, all the usual suspects are now running away with themselves going, what does Powell know about payrolls? Is it going to be negative?
Yeah,
are they going to cut at the end of July? Absolute, complete and utter bullshit, to be honest with you. Very much sticking to his script, saying that the economy is in a good position. They are in wait and see mode in terms of policy. Just on the Fed, I tweeted this out the other day, actually, and before Powell spoke, and I stand by it. I think there's probably two paths for the Fed from here onwards. If we see inflation and CPI remain relatively subdued in the June and July prints, then you're probably looking at Powell making something of a dovish pivot at Jackson Hole, which would then tee up a rate cut at the September meeting. Certainly if you have a disinflationary path in the SEP in September as well. If you don't see that, then I think you're likely to get this wait and see approach just continuing for some time. And probably the path then is just one cut this year, likely coming at the December meeting. So I think they're probably the paths that the Fed are likely to follow for the time being. In terms of those other central bank chiefs that we heard from yesterday, President Lagarde saying that the ECB is in a very good position and that they are well equipped to navigate the economic environment, again implying that they are done and dusted with rate cuts. Governor Bailey said that he is seeing some signs of softening in the economy and the labour market. Understatement of the year there with the word some. To be completely honest with you, BOJ Governor Ueda was a little bit like a spare one at a wedding, to be honest. He didn't really say much at all, apart from noting that underlying inflation is below the BOJ's price target, which we could have worked out anyway from the data that we've had recently. Speaking of data, we did have a few notable releases yesterday. Inflation in the Eurozone remaining at the ECB's 2% target in the month of June. The core metric remaining at 2.3%. The services CPI, that did tick higher to 3.3%, up from a prior 3.2%. But to be completely honest, that's hardly worth worrying about, and just cements the idea that the ECB are done and dusted for the time being. Out of the United States, we had the latest ISM manufacturing survey, the PMI rising to 49 in June, up from a prior 48.5. If you dig into the details of that report, though, a little bit more mixed. The prices paid metric accelerated to 69.7, up from a prior 69.4, so still some price pressures bubbling away there. The new orders metric fell to 46.4, while the employment gauge that fell to 45, down from a prior 46.8. So the headline perhaps papering over a few cracks under the surface, although the headline, of course, remaining in contractionary territory, and that employment sub-index potentially a downside risk to be aware of ahead of the June non-farm payrolls report, which we, of course, get tomorrow, lunchtime, a day early due to Independence Day on Friday. And sticking with the labour market, we had the May job openings data out of the States yesterday. JOLTS at 7.769 million in the month of May, well above the consensus 7.3 and the prior 7.39, also topping the Bloomberg forecast range. Now, last but by no means least, this is what I need to have a rant about.
Yes.
I know you've all been waiting for, reporting via the Times yesterday that AstraZeneca are potentially looking at moving their listing to the United States. Now, at first glance, you would say, well, this is nothing new. A lot of firms are looking to leave London, move to the US, get a better valuation, etc., etc. The interesting and concerning thing in this reporting from the Times is that this is not a valuation issue. In fact, the market cap of AstraZeneca is actually bigger than the market cap of Pfizer, or it was at least when I last looked. Instead, the nub of it essentially comes down to the CEO, Pascal Soriot, basically being fed up with the operating environment here in the UK. There being too much red tape, the government trying to get in their way when they're innovating on various bits and bobs, etc., etc. So I think that's a bigger issue because
Yes, very much
valuation,
so.
you can kind of solve that. We've spoken at length about how you can improve liquidity and how you can improve market function here in the UK. If it's a case of the bosses of big business basically going, we don't like your government, we're fed up of how you're acting, you're posing a headwind to how we operate as a company,
See you later.
goodbye, that's a much bigger issue. What is also a significant issue is that AstraZeneca are the biggest stock in the FTSE 100. Now, it does sort of fluctuate a little bit in terms of weightings between them, HSBC and Shell. They are all very, very close to each other in terms of market cap. But as of yesterday's close, AstraZeneca were the biggest stock in the FTSE 100. Now, you frankly don't need me to tell you how terrible the optics will look when newspapers run reports of London's biggest company moves to New York. Not only is that a terrible look for UK PLC, it also means that basically every other listed company in London will go, well, hang on a minute. If the biggest of big fish in this pond are turning around and going, we're off somewhere else, why the hell are we hanging around? So I would like to think that the Chancellor, Rachel Reeves, and the Business Secretary, Johnny Reynolds, as soon as this story broke yesterday, jumped straight on the phone to Pascal Soriot and said, what are your concerns? Let's sort them out. Sadly, I won't hold my breath
Good luck
that
with
they
that.
actually did that. And I think this is certainly one to keep a very, very close eye on, because if AstraZeneca are a jumping ship, then, we may as well just give up and wave the white flag, to be completely honest.
Yeah, unfortunately, I think you've hit the nail on the head there, and unfortunately, I've got nothing to disagree with, because I think we are in deep shit in UK PLC. But thank you for that, Mr. Mugwell. That cheery note to finish on before we go. Just to go through some headlines, obviously from our dear friend Zach Eisman. Do give him a follow. Also, do follow the Substack, etc., for the overnight news roundup. I will start off with. I'm going to scroll down a little bit first. What you were saying about earlier on about Powell, what does he know? He's hinting at this. Out come the tinfoil fedoras. We had very similar with Treasury Secretary Bezant yesterday, where he came out and said in a Fox interview he believes the Federal Reserve could lower interest rates by September, potentially easing economic pressures. And then straight away we had the usual lot going, what does Bezant know? Why is he saying that? He's just saying bollocks. He's just saying, potentially they could cut. Just don't read too much into it.
I think we actually might have mentioned it on here a while ago, probably right towards the start of Trump's term, where we were kind of going, Besant seemingly is a market professional and an intelligent bloke.
Yeah.
Is he just playing politics, or is he actually a bit thick? And I think, to be honest,
Yeah.
without wishing to be uncharitable to the bloke, who I've clearly never met, the longer time goes on, the more I'm sort of sat here going, maybe he's just a bit dumb.
I think he's
Without wishing to
just
be
a little bit.
unkind, I think he's just a
Well,
bit
no,
slow.
I think you can be unkind. I think he literally is just a little bit out of his depth, a little bit slow.
Yeah,
But
and if you see him in media interviews, he is painful to watch whenever
it
he's
inspires
interviewed.
zero confidence.
No confidence, no personality, he's stammering over his words. You just look at him and you're like, you're running the most powerful, the biggest economy in the world, and you can't talk to this bloke on television. It
No,
doesn't
exactly.
inspire a lot of faith. Let's put it that way.
He reminds me of a British politician. There you
Yeah,
go.
that's a good
He
way to
should be
put
in
it,
the
actually.
cabinet. He should be in the Labour cabinet. He'd fit right in. But anyway, cracking on with some headlines from the overnight news roundup. Starting off with trade, Japan's tariff negotiator heads to the US for critical talks. Japan's tariff negotiator Akazawa is arranging his 8th visit to the US for trade talks as early as this weekend, signaling intensified efforts to address trade tensions.
He just wants the air
The E
miles.
Well, this is it. Um, the EU, they have blocked the UK's bid to join the Pan-European Trading Bloc. The EU is blocking the UK government's attempts to join a Pan-European Trading Bloc to reduce post-Brexit supply chain challenges for goods exporters. That's according to the FT citing officials, a major setback for the UK trade ambitions with the EU. In macro news, for those that do have any property in Manhattan, I'm assuming not many people do on this call, but home sales surged despite trade war uncertainty. Manhattan home sales in the second quarter were stronger than they've been in almost 2 years, boosted by cash buyers undeterred by the economic uncertainty created by Trump's trade war. China, they're expanding the use of local bond funds. Chinese provinces are implementing Beijing's directive to broaden the use of funds raised through special local bond issuance, extending their application to areas such as purchases of unsold homes and repayment of corporate debt, a move to stabilise the economy. That's gone to the Shanghai Securities News. European junk bonds, their sales hit record highs. Hit record as investors cut to US exposure, reflecting a shift in global investment strategies. That's according to the FT. Peru, their copper transport has been disrupted by informal miners. I don't know if they're formal miners. Yeah, well, I don't know what the difference is there. Roadblocks by informal miners are disrupting transport of copper from some mines in Peru, including those owned by MMG Limited and Hudbay. According to Bloomberg sources, threatening global supply chains. Obviously, Peru is a major exporter of what color is copper? Like bronzy? I
Yeah,
don't know, orangey.
bronze-ish, I guess.
There you go. Geopolitics. Trump announces progress on Gaza ceasefire. He posted on on Truth Social. My representatives had a long and productive meeting with the Israelis today on Gaza. Israel has agreed to the necessary conditions to finalize the 60-day ceasefire, during which time we will work with all parties to end the war, apparently.
Has he got
A major...
planning permission for
Gone?
Trump Tower Gaza
Oh,
yet?
absolutely. Trump Tower, Beirut, following that soon afterwards as well, and also Tehran, they'll
Tehran,
get
yeah.
one. China's ports fuel Iran's oil trade. No surprise there, undermining US sanctions. Some of China's largest ports have received Iranian crude this year, supporting a multi-billion dollar oil trade and highlighting a significant gap in US efforts to curb funds for Tehran's military and uphold existing sanctions. That's a story by Bloomberg. There is nothing new there. Yes, we all know that China, like the biggest buyer of Iranian crude, what's not going there directly is being siphoned off via ship-to-ship transfers and stuff like that. But yeah, so a bit of a weird one for Bloomberg. I guess they're just finally waking up to it. US diverts Ukrainian-bound weapons to bolster Pentagon stocks. The US has stopped the delivery of air defense interceptors and other weapons intended for Ukraine and is using them instead to beef up Pentagon stocks. A Trump administration official and 2 congressional aides said on Tuesday, raising questions about support for Kyiv. In equity news, US banks boost dividends post stress tests. We actually mentioned this yesterday or the day before, saying that because the Fed had passed they'd passed the Fed's stress test, should I say, that this opened up the doors for dividends and buybacks. US banking giants announced plans on Tuesday to raise their third quarter dividends after clearing the Federal Reserve's annual health check last week, signaling confidence in their financial stability. JP Morgan Chase announces $50 billion buyback program. JP Morgan Chase, after completing its stress test, boosted its quarterly dividend and authorized a new $50 billion share repurchase program. A bold move to reward shareholders. Intel, their CEO, considers a major shift in contract manufacturing. Intel's new chief executive exploring a big change to its contract manufacturing business to win major customers. That's gone to Reuters. Potentially a shift from his predecessor's plans. China erodes US
I'm sure
lead.
Tom Talks Cars can tell us all about that.
Oh, I can't wait. China erodes US lead in global AI race. China is quickly eroding America's lead. This according to Wall Street Journal. China is quickly eroding America's lead in the global AI race. Wall Street Journal notes Chinese AI models are becoming more popular worldwide, testing American superiority in critical tech sector. I know your opinion on Chinese AI. You don't like it. Well, apart from Pony AI, we love that one.
Pony AI, of course, yeah.
Nothing wrong with them. Finally, for me, before I hand back to you in the studio, Alibaba, they're ramping up subsidies to counter competition. Alibaba is offering 50 billion yuan. That is $7 billion in real money. Subsidies for food deliveries and online retail to boost its instant commerce business in China as competition heats up. A strategic push to maintain market dominance, according to Bloomberg. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms
Thank
of...
you.
Oh, thank you very much. I hope you can hear me. My headphones cut out momentarily there, so hopefully
I can hear you.
I'm still here. Very
I can
good.
hear you.
Fine. In terms of today then, we do have quite a barren economic docket ahead. Only two releases on it at 10 o'clock this morning. We have the May unemployment figures out of the Eurozone, where joblessness is set to have remained at 6.2% in the month of May. And then at 1:15 this afternoon, we have the ADP employment report out of the States. Employment expected to have risen by 95,000 per the ADP metric last month. That will be an increase on the 37,000 from the month of May. And of course, the only thing the ADP report is good for is telling us what the non-farm payrolls number won't be. We do have a few central bank speakers today, the ECB's Lagarde, Lane, Cipollone and de Guindos, as well as BOE's Alan Taylor. They will be speaking in the closing stages of the Sintra forum, which wraps up a little bit later on today. And of course, the relatively empty economic docket comes ahead of what is a very busy Thursday. I mentioned earlier on, of course, we do get the June US labour market report tomorrow. We also get a whole host of composite and services PMI prints as well. And of course, do bear in mind that we have a whole host of early closes across the board tomorrow too, ahead of Independence Day on Friday. So do just bear in mind that conditions might be starting to thin out a little bit already ahead of that long weekend. And of course, the usual sort of standing warning that we are on alert for any trade and geopolitical headlines through the next day or so as well. And lastly, the first day of the second test is today. So at least if markets aren't doing much, we'll have something to entertain ourselves with. Please don't ever do that again.
Sorry. Perfect. Well, Mr. Michael Brown, thank you as always. You are an absolute star. Listeners, thank you as always for tuning in. We really do appreciate you. Whatever you're doing today, if you're trading, keep it tight. Whatever you're doing, stay safe. And yeah, we'll see you all tomorrow. Much love.
See you later.